What's up, Outliers? Happy Wednesday. We are in the middle of an earnings season, so plenty going on. We're getting a lot of, I think, super important updates from companies as they go through their earnings releases. We saw a couple big names today via Tesla, what they recently were talking about. There's also Google today, T-Mobile, Las Vegas Sands, Vertex, IBM. There's a ton of things that are reporting today. So I have positions on in different stuff for earnings as per usual. We will go over, actually the pro stream tomorrow is taking a double click in on different ways to play earnings, because I have a video out that's accessible to everybody. The cool thing about earnings is that it really, from an options trader's lens, is it provides an uncorrelated return source. You're essentially playing binary events. And for, again, options traders, we can essentially remove the directional element from it, at least from our hypothesis, and we could just focus on vol, which there's very persistent themes related to volatility's behavior around earnings. This is leading into earnings, at earnings, meaning during the release and immediately following. And then also there are very clear price behavioral trends following the release that we can capitalize on. So there's really a ton that retail traders can do with earnings. And I think, again, even if you're not like a super serious options trader, it doesn't take a lot of research in order to build something that you can then quite literally trade for years, provided that it continues to work and you don't have to necessarily make a bunch of refinements to the system, because it's based on a very basic market effect. So that's that. I asked you guys if there's some stocks that you wanted to take a look at, so I'm actually going to start with that. And Daniel is asking if we could take a look at BE. We will take a look at BE. Thank you for not giving me a penny stock. For anybody that is familiar with the channel, I really just don't fuck with penny stocks. Not to say any money can't be made there. It's just that for any developed account size, it doesn't really make sense unless you're like actually trying to pump and dump, which I believe there's a special place in hell for those people, because most of the time when you're pumping and dumping, it's not like you're pumping and dumping against algos of big banks and, they got plenty of money to burn. You're typically running over retail traders who don't have the money to be losing on this stuff, which is super frustrating. There's actually a couple really great recent examples of that in Open and then also in KSS. I traded both of these to the downside. And I trade them via options. So really, I'm kind of playing against the market makers there, not really taking lunch away from retail traders. They're not really part of that equation. They're not part of the exit liquidity and whatnot. But it's like stuff like this is so easy to trade. It literally is so easy to trade. These are some of the biggest gifts you can get, again, as an options trader, is stuff that moves like this that has a ton of vol in there. But anyways, back to BE. And let's see what's going on here. So 6-month big sideways trend, slightly negative sloping standard deviation channel. So negative trend over that relative period. Over the past 12 months, it's showing a really profound return. Let's see. So it's about what, 89.63% to the close. 90 and a half I'm measuring here. So yeah, that's 89%. So really big momentum coming into this period, which I always think is worth noting. Momentum is a really, again, profound market effect. When I'm talking about these really this way of trading, it's different than what you're going to hear on most other channels. And it's because most other channels are trying to hand some sort of bullshit, magic, easy strategy, always do this and make money. But the reality is that it's complete and utter bullshit. It's literally fake. It doesn't exist. So when we're talking about profit mechanisms, you'll hear me refer to that all the time. And it's because profit mechanisms, in my definition, by the way, that's my term, and I'm not like saying like I created it. It's just not an industry normal term. It's something that I've used in my trading just to help me think through stuff. And really, a profit mechanism is just a market effect that we can monetize, because there's a lot of market effects that you can't monetize. So momentum is a big one. And so far, this thing is exhibiting momentum. We can see it, we can measure it. Now, the follow-on earnings moves are not great, which is interesting, right? Because this is a fantastic example of a non-earnings response where you might expect it, because this solidly beat on EPS last release. It was expected at negative 15 cents. It came in at positive 3 pennies. Yet the stock just absolutely flopped the next day. So that's not good. That means that the forward-looking guidance was soft. And then, funny enough, the stock itself still rallied up just fine. So it was just that initial knee-jerk reaction. But that in and of itself is still informative to us when we're looking at names like this. So worth noting as I kind of poke through here. Now, let's take a quick look at the options chain. I do see call skew, and I see a lot of calls being bought, and most of it is further out in time. So what is this, 15 AUG, and then like the further expirations? What are you? 21 NOV, 15 AUG, 15 AUG. So they have earnings on the 31st-ish. Yeah, 31st. So that's kind of interesting, because when you see these positions out in 15 AUG with earnings on the 31st, it tells us that they're not actually directly trying to trade the earnings release. Because if they were, you would see it in the 1 AUG, but they're not. So that can mean a couple different things. Too early to decisively tell. And let's take a look at a couple other things really fast on BE. So strong call net premiums and pretty flat on the put side. So that's positive, but it's kind of quiet. It's actually shockingly quiet for something that's made this kind of move. Because this is a move from what, 24 to, what is this, 20, 26, 27? So again, not huge move for something like this, but that's still 10% plus. It's a pretty strong move. So let's see where most of this is. Yeah, and you can see a lot of the activity, at least on the day, is out a month and change. And if we take a look at where the current exposure sits, the majority of it is a mix between, again, about a month out and then 120 to 180 days. Something like that. But the sizes here, at least the current OIs, are modest, not huge. And it's also very interesting to see them as split as they are, right? So there's, call it 30,000 between the 30 and the 44s at 22 days. And then there's 17,000 at the 21 NOV. So they are playing this not so much wrapped around earnings is essentially what that means to me. Now, let's take a quick look at, what's up, my boy? You have a good dinner? Thor just comes strolling in. I get a big old sneeze, and now he's in here playing with toys. Perfect. Oh, let's see. So they did run net income here, which is actually pretty cool. And then a big dip. When was this? This was Q4. So it's something with their market timing on Q4 that we're seeing that trend. So, I mean, from a just general overview, the options market doesn't really look decisively set one way or the other. It does look a little bit more bullish, but it's spread out across a lot of different expirations. There's definitely way more call side premiums for sure, but a lot of these are very, very small positions, right? So we're talking 400,000, 400,000, 200,000. So it's not like there's not like a bunch of big players in here. This is a pretty small options chain. So that means generally not necessarily super informed trading. There will probably be some of it. It's something to keep an eye on in terms of the way that the flow comes in. But in terms of the chart, I don't love this. The big places to beat, it's doing good in terms of this consolidation. And as long as it stays above this 24 handle-ish, is always a little bit of room around it, then I think it's at least in a bullish consolidation. But the broader trend still from like this entire range is it's now just getting back to that point. That's never like, I'm stoked on that. That just is this performing at least somewhat as it should be. So I don't super care for it from that lens. But if a trader is like super interested in this company for one reason or another, it does look like it's starting to consolidate. And again, as long as these stay intact. But I will always remind you when I'm looking at different names, the thing I'm most interested in is it's not, could I put a trade on in this thing? It is always the question of, is this the right place for my money? And I think retail traders lose that very, very frequently. And the reason is because we get interested, we get wrapped up in individual companies, and that's okay. Again, if you want to take some sort of speculative position in an individual company because you believe in it or because you like the technology, you think it's cool, like all that stuff's fine. But from a trading lens, you can't get too wrapped up in individual names. And you guys have heard me say this before, and I'll say it again. Like, there's plenty of times I trade stocks that I literally don't even know what they do. I have no idea what they do because it doesn't ultimately matter to me in that context. So the piece to take away from that is you have to be able to pivot. And for example, if somebody really wanted to go long in Bloom Energy, like, could it be done? Sure. Like, there's a reasonable long here with some sort of stop below the 24.5, or if you want to give it some more room, definitely below like the 20 handle. But the question isn't, could there be a long trade in here? The question for me always is this the right trade to have on? Is this the right expression of that? And I would argue absolutely not, because there are tons of stocks right now that are making fantastic runs, exhibiting that exact momentum factor that we look to take advantage of. So a little bit of general context around the way I look at this kind of stuff. I don't really know what these guys do. So obviously I can see that it's energy of some sort, but let's see what they actually do. Designs, manufactures, sells, installs solid oxide fuel cell systems for on-site power generation in the US. What is this though? Convert fuel, natural gas, through an electrochemical process without combustion. Yeah, so unless there's some sort of really exciting thing in the pipeline for this, I don't really care about it, to be honest with you. This doesn't really do it for me. And the reason is, like, for comparison, you guys know I have a trade on in here. Like, what do you notice about the difference over the last 6 months if we take a look at this versus BE, right? And again, this isn't to say BE is bad at all. It's just to say that if I want to play the energy theme, for example, I'm going to relentlessly hunt for the leaders within energy. And this isn't to say, you know, that Daniel is thinking all of that stuff about this, right? Daniel just has to take a look at a stock, which is totally cool. But I'm using it as a vector to talk about broader trade thoughts and the way to go about this kind of stuff. Let's see. Dan says, I took a gamble on Tesla, vertical spread, Tesla tanks. Tesla's been under fire for a while. I actually think that the move that you saw in Tesla today is, well, I don't want to call it predictable because that's a little dramatic, but again, it's kind of like, I do think right now, based on current sentiment, news cycle, what the market is caring about, I mean, the market seems to favor the downside right now in Tesla. But that being said, it's not like it's down a ton, right? It's trading down at 318 from 332. So for something like Tesla, that's kind of standard fare, right? If we take a look at the trailing 90-day average daily range, it's 5.5%. So the thing absolutely moves. But yeah, I have a position on in here for a longer term idea, and you guys actually probably should blame me because I'm almost near positive that it's as soon as I got into it that this thing started this precipitous drop. Almost positive, just because the market has a sense of humor in that way. But like, this is actually pretty weak, right? So it consolidates here, so we can see a relative clear floor. And that to me is clear. But then as it rallies out, which is good, this is a counter trend, and that needs to happen if it's something's going to reverse from a big down move. But then it drops down and it posts a higher low. That's good. That means that the stock is still preferred over these levels at these levels. That's good. But then the problem is this. As it tries to make the next leg, it is a lower high. That is bad. The reason why that's bad is because we want to see higher highs and higher lows. Then it dips back down with lows about the same as the prior consolidation. That's good from the context of this being seen as a pretty strong support level where, again, there's plenty of buyers interested, but it's bad in the sense that it's not continuing this trend higher. So I still think Tesla looks weak overall from a technical lens. And most people are probably trading it that way, again, as I would argue they probably should, because it, in general, makes the most sense to. So what I want to do is actually take a few moments and go through Tesla earnings and see what they have. All right, let's take a look at the deck here. So let's see. Says Q2 seminal point, beginning transition from leading the electric vehicle and renewable to also becoming a leader in AI, robotics related services. I mean, that's honestly a good, sounds good. First robotaxi service launched in Austin in June. Services limited in initial scope. We believe the approach to autonomy, a camera-only architecture with neural networks trained on data from our global fleet, allows us to continually improve safety and scale the network and improve profitability. This is actually quite shocking to me. Like, this is kind of shocking. The reason why I find this kind of shocking is because to really commit to this camera-only architecture, I genuinely think is a mistake. This isn't to say that you have to go the route of LiDAR, but to me, this shows a really committed approach, and that I actually don't love. But they're trying to do this at a point that is scalable because the LiDAR integration is just way more expensive. So essentially what they're trying to do is use the neural network component integration into the car to skip that cost. But how feasible that is to be determined. I already told you guys my most recent experience in a Tesla, which overwhelmingly was good, but it did try to kill us once. So like, that is still a problem. Now, the funny thing, and this is the broader issue that I have with the perception of automated driving, is even if there are still instances where these automated cars crash, have accidents, fatal accidents, I still would argue that they're going to be safer, if not are already safer, than regular people driving, distracted on the phone, fucking texting. So, but the problem is that these are going to be so heavily scrutinized that I think that's going to be a pretty significant hurdle that is going to be difficult for these companies to overcome, because people are extremely sensitive to that kind of stuff. Rationale says Elon is talking down the stock because his pay package is being negotiated. The call was like a funeral. I didn't actually take it that way myself. That's an interesting perspective. We continue to expand vehicle offering, first builds of more affordable model in June. Is this true? I saw this, but then I haven't seen any news about this car at all. I didn't see anything about this. I'm sure they're not lying, but I just don't know the scope of this. Tesla claims it produced the first builds of its new affordable electric car. Yeah, but what does this mean? Oh, I see what's going on. So it's a game of semantics. Like, what are we considering a fucking cheaper car? So annoying. Super. Energy business more critical than ever. Yep. As electricity demand grows, Megapack product helps increase utilization. Good. So that's all good. Despite sustained uncertain macroeconomic resulting from shifting tariffs, unclear policy impacts from the changes in fiscal policy, blah, 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 blah. Okay, so let's actually look at numbers. Jesus fucking Christ. That ain't fucking good. 16% drop. Now, again, I think across the industry, I do think this is essentially being felt by pretty much everybody, but still, that's not good. Energy generation, like, why is this going down? I don't think that I don't see a good explanation for this. Why would that go down? I don't know if, let me see if I can grab the transcript. So this is on YouTube. I'm probably going to have to mute it. Otherwise, they very quickly will probably kill our stream. But we should be able to flip through and add the caption. So yeah, you guys have the audio off. It's really techno music.
Before we jump
I'm just gonna run it, and because these aren't monetized anyways, like you guys don't see any ads during these. So if it kills the stream, it's great hanging out, but let's see if we can get through it.
Exciting quarter. We're able to successfully launch robotaxi, so providing our first drives with no one in the driver's seat, with paying customers in Austin. And that's something that we've already expanded our service area in Austin. It's bigger and longer, and it's going to get even bigger and longer. We were expecting to really have autonomous ride-hailing with 12. The service areas and the number of vehicles in operation will increase at a hyper-exponential rate. We can give customers the same experience that they have in country this year, hopefully at least partially in this quarter. And then we also have some regulatory challenges in China, which we're hoping to unblock shortly, because we also provide supervised FSD in China currently. We're going to unblock that soon. That's also where now we have the robotaxi also launched. We'll be adding back those elements so that there will be a step change improvements in the quarter pilot experience for people outside Boston. So this is really, as you can tell, this is very much sort of autonomy is the story. A huge self-driving front. So continue to talk about that. We're continuing to make significant improvements just with the software. So we're expecting to increase the parameter count. Actually, at this point, I think we can probably 10x, almost 10x the parameter count. Yeah, roughly 10x the parameter count. So this is actually a very tricky thing to do because as you increase the parameter count, you get such a memory bandwidth. But we currently think we can 10x the parameter count from what people are currently experiencing. That's not just 4x, actually 10x increase in parameter count. Yeah, so it's still a lot of improvement on the existing hardware to happen. Energy is going really well, despite headwinds from tariffs and various supply chain challenges.
Oh, this is the part I want to listen to.
Energy is going really well, despite headwinds from tariffs and various supply chain challenges.
There we go. So did you see that line, spare supply chain constraints? So that I want to see if he talks more about that. Because again, him saying energy is growing at a solid clip, this says it's fucking not. So there's got to be something going on. So let's see if he talks about that.
The Megapack is expanding nicely quickly, and we have upgrades to the Megapack that will make it better, and we have record powerful plants in that game Q2. So I think batteries are just going to be a massive thing. The scale of battery demand is, I think, not that many people appreciate just how gigantic the scale of battery demand is. The way to think about it is that the US sustained power output for the US grid is around 1 terawatt. But average usage is less than half a terawatt. If you add batteries to the mix, you can run the power plants 24/7 at full capacity, thus doubling the energy output per year of the United States just with batteries. But that's a big deal. Big deal. It's a really big deal. Optimus. So we're evolving Optimus design and really getting Optimus to the point where it is a phenomenal design. So we're Optimus in version 2 right now, sort of 2.5. Optimus 3 is exquisite design in my opinion, and will be incredible. As I said many times before, I predicted it will be the biggest product ever. It's a very hard problem to solve. You have to design every part from physics principles. There's nothing that's off the shelf that actually works. So you've got to design every motor, gearbox, power electronics, control electronics, sensors, the mechanical elements. We've also got to train Optimus to use its 11 sensors with a neural net. But we'll be applying the same techniques that we apply for a car, which is essentially a four-wheeled robot, and Optimus is a robot with arms and legs. So the same principles that apply to optimizing AI inference on a car apply to Optimus, because they're both really robots in different forms. And Tesla, it is important to, that Tesla is by far the best in the world at real-world AI. Like a clear proof point for that would be if you compare it to Tesla Waymo and stuff. The car's best doing with God knows how many sensors. And yet, is Google good at AI?
So we didn't really get any follow-up. Rational says energy generation is always choppy month to month. Yeah, choppy month to month is one thing, but this isn't choppy month to month, right? Like it's actually really not that choppy month to month. But the bigger thing is year over year. And if we're determining something like this as like he's considering it strong growth, but it's literally going backwards, that actually is that's not a great sentiment. That's not what you would want to hear from an investor lens, which I find interesting. So yeah, this really isn't that choppy month over month as I look at it. It's more like this is going the wrong way for some reason. He alluded to it, right? When he said the supply chain constraints, he just didn't go into it, unfortunately, before he pivoted over to Optimus. Operating expenses is good. Income from operations, that's abysmal. So some shit happened there. What was it? And then their profit margins are contracting. Don't love that. So let's see. Decline in vehicle deliveries, lower regulatory credit revenue. So big, that makes a ton of sense. And this is something that's likely to continue plaguing them realistically. Reduced vehicle average selling price due to mix. Don't fully understand that one. Decline in energy generation and storage revenue due to lower ASP. Interesting. So let's see if they go further into this. I want to know more about this. Lower regulatory credit revenue, that makes complete sense. Increase in OpEx, this is fine. So again, this makes sense. So when we look at operating expenses and then income from operations, we can directly attach this to something that might make sense, right? So in this case, the R&D and investments into AI, okay, can make sense. We know the vehicle deliveries, decrease in restructuring charges, lower cost per vehicle due to mix, raw materials, okay. Growth in energy generation and storage gross profit. That's fascinating. So if this is the case, it means then that the gross profit increase isn't enough to offset this, which I find that challenging to believe. I need to see if we can get some history on this. So it just looks like, I can't tell why the average selling price is going down. I can't tell if it's just because ASP for energy products estimated 15-20% driven by strategic and market factors. What is that though? I want to see what this says. Here we go. Pricing strategy and discounts. Okay, I can understand this. Powerwall prices reduced by 10 to 15% in key markets to compete with cheaper alternatives. Ah, that's bad. So this tells us that not only do they not have pricing power over this, but there's competition that's going to compress their margins. That's likely to continue. I don't see that going backwards. And it looks like there's two primary competitors, BYD, which most of you know, and CATL. So that makes a lot of sense. And in a bad way. I don't love that. Higher proportion of lower priced products contributed to ASP. Okay. And then it looks like Megapack faced delays due to supply chain issues, project postponements. So again, like that's another just internal operational shortfall. So, I mean, that's really interesting that Elon he's really honing in on this, the gross profit side. But it's bad if the gross profit is not enough to overwhelm what we're seeing in the average sale price decline. That's bad. So let's continue. 3 watt, whoa. Negative 45% year over year. That's essentially crippling. There's no way to make that light. That's awful. Deliveries down, Jesus, 52% for other. Total deliveries down 13% year over year. Fuck. This is bad. Tesla locations expanding is good to see. Mobile services fleet contracting is, I honestly don't care that much. Supercharger expansion is good. All that stuff is good. So a lot of this has got to be due to a mix of like the political involvement and all that shit. FSD is expanding, which is good. This is the interesting thing, right? So this expanded. So let's see what they say. Storage deployments, again, increased trailing 12 months. record Powerwall deployments, gross profit year over year. Okay. Deploying Megapacks, Mega Factory in Shanghai as the ramp continues as planned, rationalizing energy storage, manufacturing capability or capacity. It's critical for meeting demands, shifting tariffs. Okay. They definitely have cash, so no real concern on cash. This is one thing I always like about Tesla is that they think big. This is why I hold a position in them. It's because I like the way that they're trying to create not a closed loop, but something that touches a lot of different facets of our day-to-day lives, which is pretty sick. This, I am so curious how FSD does in Rome. Because when I was in Rome driving around, that place was fucking mad. I loved it. But like the cars would literally beep at you if you stop at a red light because they just run the red lights. Like literally, that's what they do. Same thing with stop signs. So that's got to be very difficult for these kind of systems. I mean, this is smart because it still takes a long fucking time to charge. So you might as well turn it into something. But that's one of the big blockers that I have is it's way too fucking slow to charge. So I mean, I doubt that this is going to be some sort of really large scale thing. This will probably be something that's mostly just in cities. It's cool though. It kind of reminds me of like a drive-in. All right, let's see. Yeah, this is bad, bro. This is absolutely bad. 1 sec. Thor is beckoning me. BRB. Right. He is in the house and curled up like a little bean. So this is bad. Free cash flow. Notice they're burning. They're burning through it. And operating cash flow is contracting not only quarter over quarter on trend, but also year over year, which is bad. This looks a little better than I anticipated. So this isn't as profound, but this is also scaling. So as you all know, there's lies, damn lies, and statistics. And I have a pretty deep concentration in stats from both grad and undergrad. So I am very used to playing those games, trying to find ways to position stuff. So this is literally just scaling that you see. All right. So revenues are down pretty significantly, up quarter over quarter, which is good. I don't know how the 2025 quarter year over year trends, but I would guess down pretty significantly as well. Gross profit also, again, good that it's building quarter over quarter, bad that it's still down as much as it is year over year. Kirk says Tesla stock doesn't trade on the automobile business or fundamentals. It's all future expectations of robots and robotaxi. So while the car business is interesting, it's not part of the stock price. I mean, that's just completely inaccurate, to be honest with you. It's absolutely a massive part of the stock price. That is literally entirely false. Think about where their money comes from. If we break out where the money comes from, it's literally automotive. Like the bulk of this company is built on this. So yeah, no, that's honestly completely wrong. Let's see. Liabilities up a bit. Where's that coming from? Kirk says their PE does not match revenue growth of the car company. That's a completely different thing, right? The PE, quote unquote, doesn't match in a lot of companies. So that as a metric doesn't mean that the automotive component of the business isn't in the stock price. Again, like the majority of Tesla is the automotive business. The other components to it are far more offshoot. So yeah, the PE is a whole other conversation, but PE is simply price to earnings ratio. That just means that right now, the company itself is being valued at different levels based on, again, the forward expectation people have. Remember, stock market is discounting out into the future, 6, 8, 12 months, somewhere in there. So what you're seeing is obviously it's discounted future cash flows. It's not what it is right now. So just when you see a high PE, that simply means people think the company is going to grow a lot in the future. That doesn't mean that when you compare Ford against Tesla, you really can't compare Ford against Tesla. And it's not only just because the other stuff that Tesla does, but it's also because the entire automotive vehicle industry that Tesla is a very, very different industry. We spent a little while ago, not that long ago, looking at like comps, because it's hard to find comps. Rational says the car company is worth max 150 a share. The rest is all discounted. I don't know if that's accurate. I don't know if it's inaccurate, so I can't weigh in one way or the other. That might be true. It might not. I don't. Double is a little heavy, I think, based on that, but it could be. I don't know. I don't know what their intrinsic value is. We could see what their book value is. That's easy. What is Tesla's current intrinsic value as a stock price? What is Tesla's book value? Super easy to check. By the way, I'm using Grok for these. I'm actually going to use Grok and ChatGPT. ChatGPT has been honestly way better. Absolutely way better. So a lot of them are doing different versions. So Simply Wall Street is valuing them at 181. This is using discounted cash flows, which again is not, it's not the same. Acquires is pricing them at 147. Value Investing is pricing them at 176. Alpha Spread is pricing them at 59. Guru Focus is pricing them at 32. And then I'll see what Grok comes back with. Grok is way slower. And right now, Tesla's book value is like 23. Something like that. Yeah. So the intrinsic range right now is 33 to 176. Price to book is about 14 times. Let me see what... So Grok comes up, funny enough, with the same things, except it adds a couple others. It adds Finbox, which is pricing it at 283. And Guru Focus GF Value is pricing it at 242. So the average is kind of a mix between 32 and 23. If we were to volume weight them, it'd probably be the high ones. All of them have it obviously deeply overvalued to Rational's broader point. All right. Let's see. Oh yeah, I wanted to see where this debt is coming. Okay. So there is a pretty big build out in PPE. That part's good. Net cash is good. All right. Here we go. Purchases of investments is up. Capital expenditures about the same. Proceeds about the same. So it's mostly from purchasing activities. So, I mean, what I see here is just the company really needs to deliver. And it's at a pretty tenuous spot, I believe. So it's still up 39% over the last 12 months. 6 months down 22%. That's actually like really bad. I got to update one of these things super fast. This one. There we go. Let's see what's going on under the hood. And then I need to figure out how I want to manage my position. Take a look at institutional behavior. So still expanding broadly. This is good to see some purchasing activity. 1.7 million buy. Massive amount of sell, but that'll be obviously people just taking profits off the table. Let's take a look at it like the last 6 months. Yeah, it's good. I mean, it's good that there's still a mix of purchasing activity, which is good. I don't hate that. Let's see what the analysts say. Yeah. This is funny. Look at all of them. Buy, 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 buy. And look at this fucking thing is done. Fucking sideways, dog. That's so funny. Good example of how literally nobody knows. Nobody knows. Vol is still super cheap. Part of the reason why I put my position on is vol out long term is really, really cheap. So cool. Tesla looks, I mean, it looks interesting, but it definitely is in a hard spot here. That's the main thing that I'm taking away. Now, a pivot, taking a look at Goog, good old Google, they are up a little bit. So we talked about this, I think, yesterday's live stream, but I have a ratio call diagonal on in here, which is funny because the position itself has been performing pretty well, but then I added a bullish earnings play. So I traded this one directionally. So let's take a quick look. Yeah, this is so interesting. So you can see that coming into the earnings release, a ton. And this is very clear that this is designed to play earnings, to see this spike right at the end of the day. This started at 11:45. Again, this uses Pacific time. So those are, look at this. It's people playing big upside. This is part of the flow that I was picking up on that led to me putting the other positions that I on to complement the ratio call diagonal. So this is one where I can use two different things, out of the money units, and then also using synthetic longs via like a risk reversal. So this looks good. Let me just get a quick look at their earnings. We don't have to spend quite as much time on it. I just want to see the high level pieces that they have. All right. Earnings slides. Let's see what you guys got. I'll zoom this in for you guys. And then I want to talk about a couple recent trades. One of them was in KSS, the other in Open. And then I actually want to talk about some earnings plays. So cost is up 10%. R&D is up 16, which is fine. Income is effectively up, not quite full offsetting, but close. So income from operations is up 14, net income is up 19%. So that's good. So even though cost is going up, their income is compensating for it, which is what you would want to see. Sales and marketing is going up pretty significantly. Google services. So Google search, that's awesome. YouTube, don't forget to subscribe. Also, shout out, we just hit 32K. I realize doing every 1,000 is not really good. I think the next big thing I'll celebrate with everybody will be 35K. I'm supposed to be trying to hit 40K this year, but I'm so far behind. Still doing what I can, trying to make it happen. But as you guys know, I will never prioritize growing the channel over doing things, at least the way that I think is the right way. So I set goals, do my best to innovate and drive growth, but it's got to be done at least what I would consider to be the right way. Whoa, look at that. Cloud is exploding. Expenditures up huge. My guess is a lot. Net cash. So free cash flow is coming down a lot. A lot of that'll be just investments. Yeah, I mean, they look okay. They look like they're holding in there. So this looks fine, at least based on the after hours move. My position should look fine. Let's talk about a couple. Well, there's two things I want to talk about. First thing I literally want to show you, I was reviewing one of my strategies And I want to show you the refinement of the strategy, because this is pretty cool. You can literally see the refinement of the strategy in real time. So this is as a standard time series. This is one of my vol strategies in the indices. And I think it's cool. It's a cool example of the refinement of a strategy. So the stuff that I want to highlight here is, notice how there's like a clear break here, right? And everything over here, upside and downside, are sporadic, all over the place, like this. Absolutely haywire. Then you'll notice that the overall trend effectively flips a switch. This is when I implemented changes into the strategy. This is the process that I call addressing or attacking the tails, cutting the tails. The cool part about this as an example is the tails on the losers were way more frequent than the tails on the winners. So in the process of cutting a higher number of losing tails, I'm not sacrificing an overwhelming number of winning tails. So it leads to a massive, massive, massive net positive impact on the strategy. So the note to take away from this is you should log what you're doing so that you can make logical decisions about what you're doing. So in this scenario, if I did this and then I saw this start blowing out, well, it tells me what I'm doing isn't working, that sort of thing. So that's one thing. The other thing I wanted to show you was, I already posted this in the Discord, but again, this is important stuff for you all to see about the reality of trading, which is this. This is from earnings. So a recent look at my earnings strategies so far for the year. Well, this is for this cycle, so this quarter, but I was reviewing it for the total year. And you'll notice that I have two massive downside standard deviation moves. Both of those were realized today. So you can see most of the losers were controlled within about a standard deviation. And then I happen to have the misfortune of having two trades. This one was like 2.6, 2.7 to the downside standard deviations. And then this one was like 3.6 downside standard deviations. This is exactly how trading goes, especially stuff like earnings. Earnings, every once in a while, you're going to come across these instances. So what I do with this, though, is I carefully track the number of larger standard deviation moves that I'm getting, so then I can refine my screening process. I'll never fully get rid of them. You can't. But you can drastically cut down the frequency that you see these kinds of moves. But it's important for anybody that trades earnings to know, like, this is part of it. You're going to go through bad paths. You're going to have days that do this. And it's okay, provided that the underlying strategy makes sense in the long run. The last two things I want to talk about, we already talked a little bit about it in open, but this one. So it's almost like when you see moves like this, it becomes, like I said, a gift. You can trade these just like you can trade strong expansions in volatility and like VIX. These are really, really simple. Now, generally speaking, when I trade these to the downside, if I'm going to use short calls, I'm going to make sure that there's wings so I don't get stuck in a squeeze. But I buy wings that are really far out of the money. It's literally just to prevent a catastrophic event. It's not for, I'm essentially trading them as naked options, but I definitely will grab wings so that I'm not putting myself in a precarious position if there is a squeeze that sustains. So this is just a pure directional downside play. There's a couple different ways to play it. One of them is counterintuitive. One of them, you can actually trade the collapse in vol by selling puts. That sounds weird because you sell puts, it's typically a bullish strategy. But if you price vol effectively, if there's enough vol, even as the stock drops, the vol will outpace the delta. And again, we looked at this in a recent pro workshop, so this should be relatively familiar to the group. But there are cases where, depending on what strike you're at and how aggressive the options are moving, you can find places where your Vega can actually exceed the impact of your delta. Now, at this point in KSS, a lot of the vol has come out, so you're not quite seeing that priced in as it was. But if we take a look at a quick example of this, these are really, really easy trades. That's why I'm highlighting, so that at least you have an idea. KSS. And let's take a quick look at vol. And let's go back a couple days. So this is showing back from 22. And notice how much higher the front was, right? So in the front, vol was like 300% compared to what it is now, collapsing down to like 170 on a relative basis. So the reason why that matters is because that's a massive change in vol, that even though the stock has a meaningful drop, you can still profit on it via short puts or something like that to really trade the overpriced side of the options. In this case, stuff like this a lot of times has call skew. So you can see actually the bigger changes here happened on the call side versus the put side. So that's exactly why in this instance, I was trading the call side. But I'm just giving you the context for these kinds of moves to not always default to the directional kind of idea and to maybe explore the vol ideas as well. Kirk says, what % of your allocation would you put on these? This is part of the speculative allocation of the portfolio. So what I do is in my portfolio, I have a sliding scale of how much the core and speculative allocations get. And then all I do is make sure that the total speculative risk falls within that general bubble. To be completely honest, I never get anywhere near the total risk that I would allow the portfolio at. That will change soon, actually, because I have a couple real estate investments coming up that's going to very meaningfully pare the account down again. So that will be a little more topical at that point for me. But stuff like this, definitely no more than 2% portfolio risk. That's really on the high end. More often than not for stuff like this, it's sub percent, maybe 1% total portfolio risk on like an individual idea like this. But this just falls into my directional bucket, essentially. That's all. Awesome. Anything else you guys want to chat about before we wrap up? For the pro live stream tomorrow, I think we're looking at earnings. I actually have to add this to our list. So is this 24 July? This will be earnings trading approaches. So we'll have that for tomorrow. Reese says hymns. Sure, we'll take a look at hymns. Down. Yeah, so it still hasn't broken this upside trend line. It obviously had this massive gap down on the 23rd from something. I forgot what that was. Was that the deal coming apart or something? I don't remember. Yeah, that's right. So there was a partnership that got crushed. And then let's see what happened today. I'm trying to see what this is saying is going on. It didn't give us anything about the move today. Yeah, so this looks like nothing. But the volume itself clearly isn't nothing. This is 81.8 mil. So let's see where that's coming from. Let's see. Or let's not see. What the fuck? Dude. There we go. So these are right on the close. Right on the close. Got slammed right on the close. Look at that. All the way down here. I mean, that's a very purposeful position being established. Let's take a look at the underlying itself. Yeah, super strong call volume on the day. That'll happen. This wasn't necessarily strong precipitated call volume. The volume day before is like 1.7, which really is not a whole lot. So this doesn't look like super informed positioning. And then this just looks like trading the move itself. So yeah. Interesting that it's not based on anything. Yeah. It'll happen in names like this, especially when people are like really focusing on it. You can see some insider transactions, which is important because this is timing. So this tells a little bit of a story with larger selling happening at higher levels like this. But curious. All right, gang, that wraps me up. Y'all know where to find me in the Discord, being Outlier. See you guys later.